Hi guys, it's Stephen Edwards from CTA Profit First Accountant. So today I want to talk about CIS tax. I want to talk about CIS tax for sole traders and CIS tax for limited companies and even CIS tax for subcontractors. Because you could be coming at this from different angles. You can be a subcontractor and you're working for someone who's stopping you CIS tax for the first time. Or you could be somebody who's taking on a subcontractor and you're paying them and you're wondering what your responsibilities around CIS tax, and you're scaling your business and you might even be turning into a limited company and you're taking on fairly regular subcontractors, or you're paying lots of different people, electricians, plumbers, whoever it is, to help sort of scale your business. So firstly, what is CIS tax? Why does it exist? So it stands for the Construction Industry Scheme, if you ever wondered what the acronym stood for. And essentially, if I'm honest, it's pretty much because the government does not trust construction workers and the construction industry, construction businesses. As far as I'm aware, there might be some rare exceptions, but the construction industry is pretty much the only industry that has its own specific tax, or certainly in a wide scale sense that affects so many people. And it's because of the black economy, what they refer to as cash in hand. So a lot of tradesmen are, what, if you give me cash, I'll do it for X price, or even someone making a payment, what can you do for cash? So just really loosely covering cash and what does, paying in cash mean. So paying in cash itself is not, there's nothing dodgy about it. There's nothing, it's not a tax dodge as long as you declare it. If cash is banked, even if it's not banked, but it's declared, it's entered onto your accounting system, it's reported, then there's nothing wrong with it. But if you're not declaring cash, you could be a business that's paying tax, charging VAT. So effectively, if you're not going to pay that VAT across, and I'm not talking about VAT in too much detail today, but if you're a VAT registered business and you're charging your customer VAT essentially, and you're paying your own tax, if you're taking it in cash and you're not declaring it, then technically you don't have to pay the VAT and you don't have to pay the cash. In that case, that is tax evasion. It's illegal. Obviously, you shouldn't be doing that. And it has happened in the industry. It's hard to control, but that's why the government's introduced pretty much CIS tax. That's the background. Now, I'll cover the journey from, I guess, smaller businesses to bigger businesses. So if you're a subcontractor and you're getting stopped CIS tax, then it's essentially a credit against your tax record. And so when you do your own tax return at the end of the year, you enter on your tax return what the gross is, and the gross is before you had that tax stopped. So if you received £1,000 before tax and they stopped you 20% CIS tax to give you £800 in your pocket, in your bank, when you do your tax return, you have to enter it as £1,000. It's the gross that you enter, but you also enter on your tax return that you've had 20%, so £2,000 stopped from you. And this is why a lot of subcontractors get a refund, because it's a flat 20% typically. There are different rates, which I'll touch upon in a second. But it's a flat 20% in most cases. Doesn't take into account your income tax-free allowance. Everybody can earn an income tax-free amount. So in that example, if you've only had £10,000, that's below the tax limit. The tax bracket is £12,500, so you don't pay any tax. You pay a little bit of national insurance, but you're going to basically get most of, if not all, when you've got some expenses, of that £2,000 back from the £10,000, because you're below the tax limit, and there's going to be hardly, if any, national insurance to pay, depending on your expenses, and that's why people get a refund. So it going off subject a little bit, it does make me laugh when people think they might be entitled to a refund, but they've had no tax stopped in the first place. You've got to have tax stopped to get a refund. So that's why CIS subcontractors get many refunds, because it doesn't take into account their tax-free allowance, and it doesn't take into account their expenses they can claim. The more expenses you've got, the lower your profit and your income's going to be, the lower your tax is going to be, so often the bigger your refund's going to be. But obviously you need to claim things legitimately and make sure you're claiming the right expenses. Or you maximise what you're claiming. We have two jobs, wanted to do it properly. So you can sleep at night, we can sleep at night, you've got nothing to worry about, but also maximise with 20 years of experience and most of our accountants what you can claim as an expense, what you can justify in HMRC's eyes as an expense, and that can sometimes be more of a grey area than what people expect. So that's that. You might not, if you didn't get a refund during the COVID years, that's because you had grants, you had your CIS grants, and they are taxable sources of income that had no tax stopped at source. So if you had a £10,000 grant, that's £10,000 worth of extra income that goes on your return. You got to pay tax on that. If that, so you know, if you had £10,000 worth of CIS income, and then you had another £10,000 worth of grants, you've received £20,000, but essentially you've only paid tax on £10,000 of it. So that's why a lot of people have not had refunds and they owe tax during the COVID period. That covers most of the CIS issues with subcontractors, the individual receiving the money. You should get a tax voucher from the person paying you. So the person paying you should give you a tax voucher. That's kind of, I think it's a legal requirement. It's definitely best practice. It's your proof you've had that tax stopped. Because there has been some naughty stories of people saying they're stopping tax, but they're not stopping the tax. So if you can get that voucher, that just gives you that extra security, really. So moving on up the food chain, I guess it's safe to say, that so the person upward in the system. So if you're a contractor and you're paying a subcontractor, you need to consider the CIS status of the person you're paying. So if you're in a construction industry, you need to verify that person. And most of the time, when you check their UTR number, if they've registered for self-assessment, they are going to be 20% CIS. So that's what you need to stop, 20% CIS. You don't pay CIS on the material element. So if you most in our experience, it tends to be maybe labour only. But let's say you paid someone £10,000 in a year. If £5,000 of that was materials, that means £5,000 of it would be labour. So it's only 20% of the labour, which would be £1,000 that should have been deducted in the year. So if you're paying someone £1,000 in a month, you stop the 20% tax, ignoring materials. Keep it nice and simple. So you pay them £800. So you've kept 20%. You've kept £200. You need to pay the £200 to the tax man. And I know some of you might be thinking, but what if I've been stopped CIS tax? What if I'm the middleman? My customer's paid me 10 grand, or let's say £2,000 and stopped 20%, which would be £400. So I'm receiving 80%. How's it fair that I need to pay 80% to my subby plus the other 20%, so effectively 100%, the difference to HMRC? They're two separate things, and some people do try and get confused, or I would say overcomplicate it, but you wouldn't know. Why would you know if it's not your area? What you receive, you get 20% stopped. So if you've got a bigger number, you personally get stopped 20%. If you're a gang leader, then you need to divvy up and pay your subbies. You can't just divvy up what you've received and your tax is covered. You've got your own responsibilities when you pay your subcontractor. So just separate those two things. When you pay a subcontractor, you need to stop their tax, or you need to verify them. In some instances, you can be gross status, so you don't stop their tax, but you still need to report them. And I'll talk about that in a separate video. And that can be good for cash flow, but there is certain criteria to meet. But essentially, you've got to stop their tax in most cases, which is 20%. And your own tax you've had stopped is going to be a credit on your own personal tax record. So just part those things up. Don't try and connect what you've received, what you've had stopped, with what you're paying for your subbies if you're a sole trader or partnership. They are two completely separate things. And that's pretty much it. So every month you stop the CIS tax from your subcontractors. You've got multiple people. It all gets submitted together on a monthly form. It's the 5th of the month, so the 5th of April, 5th of May, and so on. And it's due, I think, around 2 weeks after. So around the 19th, you've got to submit and make those payments to the taxman. And it's just a monthly payment to keep you up to date, essentially. There is more detail. I'm sure you might have more questions. Reach out to me, but I just want to cover it at a broad level. So the next level up is a limited company. Same principle as the contractor I've already mentioned. So you could be being paid yourself as a middleman and have CIS tax stopped, and you could be paying subcontractors CIS. Same principle. You're responsible to pay their CIS or deduct their CIS, exactly the same. You might also be suffering or getting deducted CIS from your income as the contractor. Just to rewind slightly back to a sole trader, what you've had deducted yourself does go on your personal tax return. So you're probably going to get a big credit if you're like a gang leader, for example, you're paying multiple people. So it's the same as a subcontractor and a contractor. If you're not limited, you do your personal tax return and you enter what you've had suffered personally. As I mentioned, separate to what you pay out, completely separate. Limited company, same principle. You can have something suffered, but it's your limited company that has the credit, that has the suffer, not you personally, because you're a limited company. Think of a limited company as a different entity, because it's not you. You just own or work in that limited company. And then you also need to still consider you need to deduct and verify who you pay. Exactly the same. The only difference is the credit for your CIS you've had suffered, if you've had CIS suffered as a limited company, is on your limited company account. It's not on your personal tax account. So your personal tax account is different. Your personal tax account will just show you as an employee of your business and you as a shareholder if you receive a dividend, which is a separate conversation. So you do have a credit still, same principle, but it's sat on your limited company account and you can get that repaid at the end of the tax year after the 5th of April. In some cases, you can also offset it against your corporation tax bill if because you're probably going to owe tax as a limited company. So you need to deduct it from what you're paying as well as a limited company. If you're paying your staff, you need to deduct it. The key difference and the key advantage is if you're a limited company, you can offset what you've deducted from your staff against what you've suffered yourself. So let's say, for example, you've had £10,000 in a month. You've suffered £2,000. You've had £2,000 stopped. So you've only physically received £8,000 in your limited company. You as a business entity. So you've got a £2,000 credit on your limited company account with HMRC. If, however, you've paid your staff £5,000 gross, so you deduct £1,000, which is 20%. Assume they're all 20%. You pay them 80%. You're paying them £4,000. You normally, as a sole trader or partnership, you need to pay the 20%, the £1,000 to the tax man the following month. However, if you're a limited company, what you can do is offset the two together. So you've got a credit of £2,000 for what you've had suffered. You owe £1,000 for your staff. So you can basically use your £2,000 credit so you don't have to pay that £1,000. So you'll offset your £1,000 that you owe out for your subcontractors. You've stopped that from your subcontractors against what you've suffered. So what you're left with at the end of that month is £1,000 as a credit. So same principle, exactly the same principle. What you have suffered is what you have suffered. What you pay, you need to make the deduction and you need to verify these subcontractors. But the difference is if you're a limited company, you can actually offset the two. So you're using your credit month to month or some of your credit and what you've had suffered to help with cash flow because you're deducting it from your subcontractors. If you're not a limited company, you have to pay it over monthly when you make a deduction from somebody else. That is CIS 101 in a nutshell. There's lots of nuances, lots of specifics. If you've got any questions, reach out to me. We deal with lots and lots and lots of businesses in the construction industry. We have painters and decorators, quite a few of those, plumbers, quite a few of those, electricians, quite a few of those, builders, and we have people around the construction industry, so architects, surveyors, and people just connected to the industry in general. Reach out to me if you've got any questions. Thanks, guys. Cheers.